This is the Daily Market Comment by Rafi Boyadjian. I'm Maria Bachardis. Thanks for joining us at XM.com. A bombardment of hawkish talk from Fed officials continued to set the tone on Friday as the week ends on a somewhat more somber tone than from how it started. Hopes that slowing inflation will allow the Fed to call time on its rate hike cycle have all but disappeared, as policymakers have once again stepped in to quell any such speculation. Although it's looking increasingly likely that inflation in the United States is now on a downward course, the Fed clearly isn't ready yet to take any chances by easing up on its tightening stance. St. Louis Fed President James Bullard suggested on Thursday that rates may need to go as high as 7% in the worst-case scenario, with a 5 to 5.25% target range being the minimum level required to combat high inflation. Hawkish sound bites have managed to halt the slide in Treasury yields, but the 10-year yield remains well below where it was before the CPI data. Equity markets, on the other hand, have only suffered a minor bruising, and Wall Street futures are climbing today. Although the S&P 500 ended in the red yesterday, it stands a good chance of erasing this week's losses today, with European shares leading the advances. A downbeat assessment of the UK economy by Chancellor Jeremy Hunt briefly pushed sterling below $1.18 yesterday as he presented his autumn budget statement. The budget was a mixed bag, but the tax burden overall is set to hit the highest since World War II. However, with investors not having to worry about another bond market episode for the UK and retail sales surprising to the upside today, the pound is back on the front foot for now. The yen bucked the trend against the US dollar and is headed for marginal weekly losses, even as inflation in Japan has started to simmer. The core consumer price index rose 3.6% in October from a year ago, the highest in 40 years. Governor Kuroda again signaling today that a major policy shift is unlikely until wages are rising sustainably. The yen is in danger of weakening past the 140 level again. As for the greenback, it's still looking a bit vulnerable, even though the hawkish Fed talk has stabilized it for now. This was today's Daily Market Comment. Thanks for joining us at XM.com.